My name is Sheila Elliott, and thank you for visiting this website today. In the next few minutes, I'm going to be sharing with you strategies for raising finance for your business. Whether you are just setting up a new business or you are already in business and looking for finance to expand and grow your business, I would like to share with you some top strategies that you can use to achieve your goals. Many businesses are out there looking for finance, and very often when they approach my company, they approach my company with only one thing in their minds. They only want to know whether they will get the money and how much money they can get. They very rarely ask what is it lenders are looking for or equity investors are looking for. So I want to align your needs with the lender's needs and the equity investors' needs so that you can better prepare yourself for that time when you will approach any of the banks or equity investors for finance. If you want to raise finance successfully, I want you to look into the minds of investors and lenders. When they approach for finance, they have silent questions that they ask themselves. For instance, they will be asking, what's in it for me? Can I make money out of this deal? What is the potential risk and rewards of this opportunity? Do I understand the business well enough for me to invest in it? What are the credentials of the individuals involved in the business? Can I trust these individuals or this business that is in front of me asking for my money? Can I trust them enough? Do they have the capacity to pay the money back and to manage the funds efficiently? Can they provide us with the returns enough to justify the risk that we are taking with them? All of these typical questions will be what lenders and equity investors will be asking. And to the extent that you have better prepared yourself, you are not going to be able to influence them effectively. So if you are going to influence lenders and investors to invest in your business, you've got to demonstrate to them that your business idea is sound and solid and viable. In other words, you will be able to market your products and services efficiently and effectively to generate the income that will enable you to repay the money, the capital that they've invested in your business, as well as the returns. In other words, you have to research your market effectively, because to the extent that you have researched your market effectively, you will be able to answer the questions that they have asked. So at the very basic, you need to be able to define who your market is. So there is one particular documentation that every bank's or equity investors or even private investors will always ask you for, and that is a business plan. Without a business plan, it is near impossible for you to raise finance. But having a business plan by itself does not guarantee you will be able to raise finance. So here are certain pointers that you should ensure are included in your business plan if you are to be successful. I call it writing a compelling business plan. The first point is you have to ensure that your business plan includes vision and mission statements, market analysis, product pricing, analysis of the resources that you have in your disposal, the environmental analysis, your marketing strategy, the SWOT analysis, and dare I say a projection of your financial income and expenditure, as well as the balance sheet and cash flow projections. Putting together a compelling business plan will also enable you to look at the inherent risk of your business. In other words, you have a very good understanding of all the risks that are associated with the business that you're running. So for example, strategic risk, operational risk, financial risk, political risk, all of these different risks you've got to understand, because there isn't any business out there that you can find with no risk. In fact, if you were to tell a lender that your business have no risk, it is more than likely they are not going to finance that business, because that in itself is a risk. Beyond providing the projections, I want to share with you some internal truth. When a lender look at your financial projections, they will normally make some comparison with what they already know about that industry. So they have financial ratios that they will normally use to make an assessment about your business. And dare I say, they will look at the financial profile of your business alongside what they already know about that particular industry. So here are some of the financial ratios lenders will typically look at. They will look at the gross profit margin, the net profit margin, the EBITDA, the liquidity ratio, which is calculated with a ratio called working capital ratio, the gearing ratio, and so many other ratios will be used. Now, what this means is that you, the business owner, or a member of your team, must have a good understanding of the financial language. If you have watched The Dragon's Den, you will quickly see what a typical question will be asked of the entrepreneurs that attempt to find themselves into that den asking for finance. The biggest mistake you can make is to enter a den, or dare I say, enter a meeting with a lender without having a clue about the finance. That in itself is a risk insofar as the lender is concerned. So for that reason, I have put together a book which contains 2 chapters on this very subject. And the book is called My Business is My Business, Learn How to Earn a Fortune. You will find in this book tools that will quickly enable you to familiarize yourself with all of the intricacy involved in raising finance. In addition, you will also find a CD, and if you do not know where you could find a CD, you could go onto my website, which is www.businessservicessupport.com, and when you get to the home page, you will find a product link called Small Business Finance. When you go onto that page, you will find a lot of tips on what is involved in raising finance successfully. But in addition to that, if you scroll down to that page, you will find a copy of the book as well as the CD I'm talking about. Now, even if you are a business that's been turned down by a bank, do you know you can raise finance in the United Kingdom through the government's route? The governments in the United Kingdom have a number of projects that are designed to help businesses that have not been able to raise finance in the traditional manner. In fact, my company is involved in this particular project. It's called the Access to Finance. If you would like to know more about the project, I urge you to contact my company. But I must pre-warn you, you must have a solid business idea in place, because this is not a free-for-all. Lenders typically make their money by lending to good, sound business. They do not make money by giving it to businesses that are not likely to pay money back. So, there's a lot of eligibility criteria that you have to meet if you are to be able to get assistance through this route. Otherwise, contact us on the page that I've already mentioned before, or you could give us a call on 0845 226 4315 and an advisor will get back to you. Without any further ado, I wish you all success in your business